Welcome to ForexTV.com. Today is Monday, January 5th. I'm Kathleen Reddington with your New York Forex Market Buzz. The dollar makes gains on the euro. And now for a look at the latest headlines from the CEP News Desk. Construction spending in the United States continued to decline in November, falling by 0.6% month over month. The consensus had forecast construction spending in November to decline by 1.4%. The total construction figure for October was revised upward to negative 0.4% from negative 1.2%. The New York Fed plans to begin buying U.S. mortgage and student debt effective immediately, geared at thawing frozen credit markets in the country and restoring confidence to the economy. The operation is the first of a $500 billion project. The UK PMI for construction fell to a record low of 29.3 in December, down from both the 30.5 level expected and November's 31.8 figure. Today we are joined by Stephen Leahy of Back Bay FX. Hi Stephen, how are you today?
Doing great, thanks Kathleen. I always appreciate being on your show.
Thanks. Well, the dollar is at a 3-week high on the euro. Based on speculation, it seems the dollar's gain anyway is that President-elect Obama's tax cuts and fiscal stimulus plan will help to boost the economy. Do you think traders are jumping the gun a bit on this?
Kathleen, I do think traders are jumping the gun a little bit on this dollar move, specifically versus euro. One of the things we've been discussing here is we do think a broader cause of this euro-dollar move specifically has been the euro-sterling coming off over the weekend on Friday and kind of during some downtime and slow data time over the last few weeks. We've seen more and more chirping from the ECB, from other kind of prominent economists and finance ministers that the ECB may actually have to cut rates, and they don't come out and actually say they may have to cut rates. They just start mentioning that they're looking at deflation, not worried about inflation. I think that's been a real big cause of the drop in euro today. Additionally, when we think of drop in euro-dollar, obviously that means strength in the dollar. The conflict in the Middle East with Israel invading Hamas, certainly the flight to safety, buying dollars, always a pretty easy cause and effect relationship.
All right, so that being said, what is your dollar strategy for this week going forward?
For dollar strategy, we do think the dollar strength here is a little bit overblown, and so we will continue to look for opportunities to short the dollar, specifically versus euro. We'll look at it versus dollar Swiss as well, and finally versus dollar Canada. As we have been mentioning for a long time now, we think dollar Canada is weak and should go lower. Specifically in terms of a dollar trade for the course of the day here, we do think we've hit kind of a breaking point for the dollar strength, and we're looking to put on some short dollar moves, looking to rebound. Euro-dollar, we think we might be able to get 100 points out of this, move higher in euro-dollar before the London session opens.
All right, and you talked about euro-sterling just before, and as you said, the pound did appreciate on the euro. But last week, everyone was talking about perhaps parity with the euro and the sterling. Do you think we could still see that?
I don't, and actually, the thought of parity, every week and every day you start looking at euro-sterling as it moves higher, and when you finally got to that discussion of parity, it reminds me a little bit of Australian dollar, as I was approaching the 98.50 mark merely 6 or 8 months ago or so, and you started thinking, wow, could the U.S. dollar and Australian dollar reach parity? And instead it came crashing and tumbling down on a multi-month basis. For us today with euro-sterling, we saw it come crashing down a few hundred points here over the course of the last few hours, which, a move of 280 or 290 points or so on euro-sterling is just unheard of over the last at least 10, 12 years that I've been in this market. And so I'm not surprised that we had a big give back. I do not think that we'll reach parity on the two currency pairs, because we do think that the ECB is going to have to cut rates sometime in the future, just not yet.
All right, and you just mentioned the ECB cutting rates. We do have announcements from both the BOE and the ECB coming up through the month. What do you think their moves will be?
Just one man's opinion here, but I think Claude Trichet has continued to talk about fighting inflation. And the one thing we have to remember is that here in the U.S. and in other countries, the mandate is to watch for inflation, but also help stimulate the economy. There's a technical difference in the ECB's mandate, and that is that they are to watch inflation. The ECB technically is less concerned about the economy. Now, that being said, doesn't mean that they are not paying attention to the economy, But again, the mandate that the ECB has is to keep price stability and to essentially watch for inflation. And so I don't think that they will take any drastic action. Might they cut rates a little bit? Sure. But I feel as though Trichet has at least tried to draw a line in the sand, and he will try to stick to his guns here and hold off on any rate cuts for as long as he can.
All right, Stephen, thanks so much for being on the show today.
Thanks for having me. I appreciate the opportunity.
This has been your New York Forex Market Buzz with Stephen Leahy of Back by FX. I'm Kathleen Reddington. Join us later this afternoon, 4 p.m. exchange, right here on ForexTV.com.